This person has dominated this space. She has become a renowned investor in Wall Street. She manages a $60 billion fund. She's been a featured speaker, okay, all over every CNBC, MSNBC, Fox News, Fox Business, and spoken at the World Strategic Forum. Please welcome my friend, Miss Cathie Wood. Cathie, my first question, we did a Spaces together, which I absolutely loved, and my audience loved it. And one thing I do in interviews is I try not to study a person too much, because then it gets me all kind of lost in other things you've been asked. So I'm just gonna ask you some things I'm interested in about you, all right? Right. How does a woman, like it's predominantly a male space, is that right? Mm-hmm. Yes. So like what percentage of the finance community is women?
Gosh, I don't know the answer to that. When I started, which was a very long time ago, there were very few women. Then we went through the 80s and 90s and the big bull market then, and we saw a lot of women entering the business, which was fantastic. And then we had the tech and telecom bust, and last in, first out. A lot of women left. And then we start again, and we get to 08, 09, same thing, last in, first out. So very often, I will be one of the few women still in meetings. It is quite surprising.
Yeah, and so how do you, because men don't understand this, right, phenomenon, like what it's like to be in a room where you're the minority in the room. How do you move in? How does a woman operate in that space? I mean, do you have any advice for the women here? Because you're in a very alpha space in finance.
Well, a couple of things. In the space, I've had incredible mentors. Many of them men, some women. And so definitely go look for that mentor. You know, make sure that you're partnered, in essence, with someone whom you believe will allow you to grow. And it's a little bit of a quid pro quo. As you know, when I was starting in business, it was, what was my objective? My objective, when you're very young, you think you know how the world works.
Right.
And Art Laffer, for those of you who know Laffer curve, supply side economics, he was my professor at USC, and I thought I knew how the world worked. And I was going to go in and make Don Conlon, the chief economist at the time, look brilliant. And that's, you know, I had the pleasure of meeting Sabrina and watching Scarlett. No, I met Sabrina backstage, and you know, they have it. I can tell they have it. So you're doing something right, Elena and Grant.
Thank you.
But I think it's imbuing them with that confidence. You know, I was the firstborn of Irish immigrants. And they always treated me as the firstborn son, meaning I could do anything I put my mind to. I think it's so important for parents to believe in their children, to encourage them, to give them, you know, growth opportunities, to find themselves, and so forth. Yes.
And would you recommend that people, the kids today, would you recommend these kids, a bunch of the kids that are helping us out with our security and stuff, would you recommend finance as a place for people to go and work today?
Well, I'm going to answer that in two ways. The business I joined back in the late 70s when I was in college and early 80s, the business I joined because I said, oh my gosh, the world is my oyster. The world is our oyster. They're paying me to learn how the world's going to work. And so I just was completely taken with the business. Today, the business is very different today. And it is because of the tech and telecom bust and then the 08, 09 meltdown. The traditional asset management world is playing it what they consider safe. I think they're taking a terrible risk by investing in line with benchmarks.
You're talking about the ETFs, so the Vanguard.
I'm talking about the public equity markets. Stocks are listed on the various exchanges. And there are benchmarks out there, like the S&P 500, the NASDAQ, the MSCI World. And many investors now hug those benchmarks. They say, okay, I'll be a little bit more of this and a little bit less of that. That's not investing in my world. In our world at ARK Invest, we are very focused on understanding how the world is going to work, not the way it has worked. Benchmarks and the stocks at the top of benchmarks are there because of some great success historically. But if we're in a world of disruptive innovation, the likes of which we have not seen in more than 100 years, then the risk is that the traditional world order is going to be disrupted. So that is not a place of safety. But the reason that happened was the tech and telecom bust, 08, 09, and feelings of career risk and business risk. So a very defensive posture. And yet all of this innovation, the seeds of which were planted in the 20 years that ended in the tech and telecom bubble, those seeds have been germinating and they are beginning to flourish. And so this very defensive posture is inconsistent with the possibilities ahead.
So the disruptive space that like you're not looking at what happened.
No.
You're looking, because some of the stuff that you do, I'm like, okay, when did they start making money? How does somebody have the courage to invest in something that hadn't happened? How do you do your due diligence?
Yes.
And then lastly, how do you make a bet and sleep well at night? Like,
yes.
I'm a coward real estate guy. And you're betting on companies how do you do that?
So ARK Invest and all of our ETFs, which you mentioned, so ARKK, ARKW, all of those are in the public equity markets, but we call ourselves the closest you'll find to a venture capital company in the public equity markets where stocks are listed on exchanges. And our due diligence is centered around something called Wright's Law, which is a relative of Moore's Law.
Okay.
So what we're trying to figure out is how quickly the costs associated with these new technologies are going to fall, and how quickly those cost declines will turn into price declines, which will enable these new technologies to scale across sectors. So we're looking at mass market opportunities caused by technologically enabled innovation that can be measured. The cost declines can be measured. We're very methodical about that. And just to give you a few examples, artificial intelligence costs today are dropping at, if you combine hardware and software, 70% per year.
How much?
70%.
70. Okay. Oh, 70.
70%.
70.
Yes. And we see robotics costs for every cumulative doubling in the number of robots produced, dropping 50%. We're seeing battery costs down 28% on the same basis. So we center our research on that, and we're able to tell when costs will be able to fall to low enough levels that the general public will be able to afford them and become very interested, and we can scale and enjoy exponential growth trajectories.
So you're talking Tesla then?
Yes.
And electric vehicles. How does that affect General Motors competing with the Tesla? Does it help General Motors or does it benefit Tesla?
So Tesla is first and foremost electric and autonomous. Those are the two big opportunities that Tesla is pursuing. General Motors has a problem. Its business has been centered on the internal combustion engine. And we believe that electric vehicle costs and prices are going to drop well below gas-powered car prices. Already the total cost of ownership is lower. And so GM has to make two giant leaps, one from the internal combustion
They got to kill that.
to batteries.
The assembly line
but that's kind of tough. They've
Right.
100 years.
Right.
Culturally in that world. And, I have to give Mary Barra a lot of credit. When I, on a news program, said, we think the traditional auto manufacturers are going to, if they're going to be around, they're not going to look anything like they do now. So she actually called us and wanted us to go visit, see what they're doing in electric and autonomous. And to GM's credit, they bought a company called Cruise Automation. And it has gone autonomous in San Francisco, now Austin, and Arizona. So they're trying, but it's Herculean.
Yeah, you're saying, so they're labored, the assets they had in the 60s, 70s, and 80s become liabilities now.
Yes.
They carry a lot of debt.
Stranded assets.
So what do they do with those assets? Do they abandon
well,
them?
Ultimately, when you get into disruption like this, what happens is the incumbents say, all right, like take online retail when Amazon came along. Well, look at Walmart today. It's bigger and better, and it has an online arm. You have a few very big survivors because the world that's being disrupted consolidates and restructures. And we think in banking it's going to be the same. You've got digital wallets we think are going to really disintermediate. Oh, there we go.
There's some digital wallets back there.
Digital wallets will disintermediate traditional banking. And we see JP Morgan and some others, Bank of America, very focused on technology and trying to make sure that they do not lose. So we will see a lot of consolidation and restructuring in the traditional world.
So you mentioned the New World Order. So how does all this electrical, the robots, how does this kind of play into that, the plus and the minus of a New World Order? And how does it affect these business owners?
So we just put out a report called Big Ideas. We believe right now in the global equity market, so public and private, that truly disruptive innovation is valued at about $13 trillion. So that's it's around 10% of the total global equity markets. We believe that $13 trillion is going to scale because we are ready for prime time in genomics, which we call multiomics now.
What is that?
Multiomics includes DNA, RNA, protein sequencing.
Okay.
We're really beginning to understand the causes of disease.
You're not talking about the vaccine right now. You're talking about...
We're talking about curing disease by editing genes.
Okay.
Because now we can, yes. Isn't it exciting?
Yeah.
Yes. So multiomics sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. Those 5 platforms, which involve 14 different technologies, are going to scale from 13 trillion to 200 trillion by 2030. That's a 40% compound annual rate of return, which is a spectacular growth rate.
Yeah.
Now, you talk about 10x. This is your company, 10x.
Yeah.
So if these strategies are our strategies, and I'm saying if, I have a very strong compliance department here.
Right.
If our strategies were to scale 40% per year on average, and that's just the average. Hopefully we're better than that. It would take 6.8 years to 10x.
Wow.
Whereas for traditional stocks, now historically the S&P 500 has delivered a compound annual rate of return of 7%. That would take 78 years to 10x, I believe. No, that's cash would take 78 years, 34 years to 10x. So
I don't want to wait 34 years.
Getting on the right side of change is so critically important because the changes are so enormous.
You shared with me about what Amazon was doing with robots per employees, and I had never heard those numbers. Will you share them?
Today, Amazon has more than 500,000 robots and more than 1.5 million employees, roughly. So their robot penetration per 10,000 people is 3,200. If you look at the manufacturing world, in the United States. If you look at manufacturing, that number is only 140. We haven't even begun the movement towards robotics, but now the convergence of artificial intelligence and robotics and the sensor technologies, where we'll be covering robots with sensors so we can work alongside them, we think is going to transform the world completely, and it's going to help us with the massive labor shortages around the world.
So what does this do to labor? Like, to me, this threatens an explosion of unemployment.
No, the history of technologies, it is a net job creator. Now there is
Give me an example. Why would a new technology?
So the internet in the early 90s, we were trying to figure out, okay, what's going to happen here? And we would have never dreamt of Uber and Lyft or Airbnb, but they could not exist without the internet. Right? But we weren't thinking about them. They didn't even come along for 15 or 20 years. So the human ingenuity is amazing.
But what about when they get rid of the Uber driver?
So,
if we ever get autonomous.
And we will.
You're convinced the autonomous is going to happen?
Absolutely convinced.
Because my wife does not trust me driving.
We are going to consider automobiles weapons of mass destruction about 10 or 20 years from now. I can't believe that as a 16-year-old, when I was 16-year-old, my parents let me drive that weapon of mass destruction, right? This is...
You were a bad driver? Or?
So I was a teenager.
Right,
I took risks.
Yeah.
But there are 45,000 people die in the United States because of auto fatalities. 80 to 90% of them are because of human error. And that number in the world is 1.5 million. So yes, so this is going to save lives. Innovation solves problems. Innovation solves problems.
So what do you say to the critics, to those that are like, okay, she's too aggressive, she takes too many risks, she's too in the future, the fun's down, like when you have those moments and it's down or it's up, like how do you handle the critics, the naysayers, the haters?
Well, it actually in a strange way makes me feel better, because being in the tech and telecom bubble was extremely uncomfortable. We knew that valuing companies on the number of eyeballs they might have watching them in 10 years was wrong. And today, and the reason that bubble happened is the internet lit a fire, the genomic revolution, personalized medicine, but the technologies weren't ready, the costs were too high. Now the technologies are ready, the costs are too high. What happened back then? Investors just chased the dream, but it ended badly. Now they're running away from the reality, and we think that is going to end badly as well.
So you're talking about what happened with crypto then, recently, that pullback, the NFT. Were you a proponent of the NFT space? And are you now?
Oh, still are. Yes, NFT space, very much so. No, the crypto revolution is not
So
dead.
talk to me. How many crypto people here? Oh my God, we got some cryptos.
And 3 revolutions in one. We've got the money revolution. That's really Bitcoin and Ether. And that is what Art Laffer, my mentor, said, oh my gosh, this is the rules-based monetary system I've been waiting for since we went off the gold exchange standard in the early 70s. It's a very big idea. Then we've got the financial services revolution. FTX has certainly heard it. But what was FTX? Sam Bankman-Fried did not even like Bitcoin. He didn't like it because it was too decentralized, too transparent, and he couldn't control it. FTX was completely opaque and centralized. It almost proves the point that this movement towards decentralization and transparency is the wave of the future. And we do think DeFi, it is. We're convinced of it. DeFi has had a setback, but this is what always happens early in
the internet busted in 2000. It didn't go away.
And then the third revolution is digital property rights. That, as an economist by training, there is nothing like property rights to raise people and countries out of poverty. This is digital property rights. And
so are you saying like the properties that I buy, I would digitize those and people?
There's going to be the digital and the physical world will be meeting each other. But NFTs,
Dude, this is amazing. I can't even think with that. How does that happen? Like, how does the digital and the physical world?
Already, if you look at how, maybe not your children, because I know they're homeschooled, so they probably, but if you look at how young people spend their lives, how much of their lives do they spend online?
Yeah.
And their identities are now being formed online. And the authenticity of that identity, the ownership of that identity is becoming critically important to them. So it's a world that you and I are not living in, but it is alive and well, and it is going to burgeon in a way that is going to surprise people who are not paying attention to this.
So how do you live there, Cathie? Like, because I grew up, with bicycles and guns and I did. Like I had a gun when I was 11 years old, man. And, we walked to school or got on a bus and we came home when the lights went out. But how do you got to be a similar age to me.
I'm older.
No way, how good does she look, huh? Right? She must be on 10X health. How do you live in that world? How do you think like that? Because I can't think about me being in a digital universe yet.
Well, if you're on Zoom and
you're right.
You're in the digital universe. If you think about the earliest manifestation, when we're trying to help people understand what NFTs are, people were talking about avatars, but the first real Web3 experience was Zoom, right? So you're used to that.
Very.
You need it, right?
Yeah.
Okay, we'll get you there. We'll get you
Get me there. Pull me into the
Yeah. No, it
the
is
future.
So exciting.
Yeah.
Look, you're 10X, 13 trillion to 200 trillion. Doesn't that pull you in right there?
It kind of does pull me. It definitely gets me interested.
And it is why we feel this movement is so important. And we feel, and I was listening to some of the commentary here, we feel that everyone needs to be a part of it. And that is why we have broken all the rules, or they're not exactly rules, but the conventions, and we have started our own public-private, dominated by private companies, venture fund that non-accredited investors for $500 can invest in. And we're doing it, talk about the digital world, we're doing it with social distribution through an app called the Titan app. So for $500, individuals who were blocked because they have the right income threshold or asset threshold, they were blocked from these 10Xers, 100Xers. They have been blocked.
You're talking about the big 10 baggers, the big opportunities, the IPOs.
Getting these companies very early on in their lives. And I believe that our research, we're the only company out there doing research exclusively on disruptive innovation, suits us towards this kind of portfolio. So it's the ARC Venture Fund using the Titan app. And I do believe we're going to be democratizing, and that's what I see you doing here,
right.
Democratizing the world of private investing.
So talk to me about how locked down Wall Street is right now for the wealthy, because this is what I discovered when we started raising money for non-accredited. Everybody told me, do not go for the non-accredited. It's too much trouble. It's too expensive. I'm like, yeah, but it's the right thing to do. And then that's when I discovered how locked down, some of these abbreviation networks are protecting Wall Street. Can you just talk about how wealthy people need to be to actually ever get on the inside of a deal and what you're doing to democratize and make the little guy a chance to win on a big score?
Let me tell you, even the wealthiest people are having trouble getting into deals because that world of deal making is so small. I mean, we are able to get into deals that foundations and endowments and small institutions are not able to get into because we're doing something different. And the venture world wants to be associated. They've been criticized for not paying attention to non-accredited investors. So they are actually helping us, and we are getting into deals. But to give you a sense of how important I believe this investor base is, if I know our client base in the public world, they are non-accredited for the most part. They're the ETFs,
the base is...
so ARKK, ARKF, these are ARK's ETFs.
These are liquid funds I can get in today, get out tomorrow.
You can get in, out, you can get in, and a minute later get out, right? That's how liquid they are. As I've studied our client base, I have been struck that they know so much more about the technologies we're investing in because they read our research. We give our research away. They're grateful for it. They want opportunities, right? If you ask me who the accredited investors are when it comes to knowledge base, which is how I think this should be measured, it's our client base. It is not the institutions. It is not the high net worth individuals. It is individuals who are excited about how these technologies are going to transform our lives, how they're going to level the playing field and give everyone a shot at an amazing future.
Yeah. And you're saying the hedge funds and the pension funds, the traditional institutions, you're saying are not looking at those small companies early on?
They think, in terms of just our basic ETFs, they think we're crazy because we don't look like anything like an index. In fact, we pride ourselves in not looking like an index.
Meaning what? You don't have a balance?
We don't look like when in the 80s and 90s, the NASDAQ was known for being the place to go to access innovation, gain exposure to innovation. If you look at the NASDAQ today, we don't own any of the stocks in the NASDAQ except for Tesla in our flagship portfolio. So that's a great opportunity.
So the stocks you own today would be what? Would we even know the names of these companies?
Well, if you know Exact Sciences, you know Cologuard.
Okay.
You know, okay, well, it's not just about colorectal cancer. It's about all kinds of cancer, finding it in stage 1. That's a big idea. It's about Roku, connected TVs, taking share from linear TVs. You know, they have 18% more households than linear TVs do here in the United States, but only 23% of the advertising. That's a very big idea. We've got Teladoc, and we think that's going to be the healthcare information backbone of the United States, if not other parts of the world. So these are very big ideas, and very importantly, I think when people think of artificial intelligence, they have an internet mindset. What's going to be the killer app here? That's not the right question. You want to figure out how to harness AI to increase productivity, increase your efficiency. That's the first killer app. And the second killer app is really all about data. The companies with really large pools of proprietary data, as some of these companies I've just mentioned.
Teladoc.
Yes, Teladoc, Exact Sciences.
Roku would have a big database.
Huge databases.
What are you saying? They're going to sell those, or they're going to leverage those later?
They're going to leverage them. They're going to leverage them. You're going to be able to order in the Roku app the dinner that's just been advertised on the television show you're watching. So yes, it's the convergence of all of these technologies.
Man, it's amazing. Okay, like how do you when does your staff bring you an idea and say, Cathie, look at this, or they're doing the work? I mean, how does that?
We are working together every day, morning meetings, brainstorming.
Who signs off who says we're going to invest? What's a big investment? Like, how much money would you put in?
Oh, gosh. Well, we run almost $25 billion. So 1% of $25 billion is a starter.
Wow.
Yeah, so.
See, that's why I got to get around grown-ups. Because I'm thinking like I've been thinking like a punk over here. No. So when you look at a guy like me that's investing in real estate, it's got to have cash flow. It's got to have a great location. I got to have leverage. It's got to be full. What do you think about a guy like me? I'm just a coward.
No, I love
what do you think
that
about real
you're
estate?
out there because I think all investors need to diversify. Your strategy is a much safer and less volatile strategy than ARC's strategy. And there's a place for both of them. You know, diversification is critical and rebalancing as our stock price appreciation in 2020 was off the wall. During that kind of time period, you take profits from something that's gone way, you know, has had.
How much did you move in 2020?
It was about 150%.
Oh my God.
Yes, so it was innovation solves problems. We had a lot of problems, COVID, right? Innovation solves problems.
So you were in Zoom, you were in all the stocks that were stay home.
We actually took profits in Zoom and Teladoc and all of those that were obvious at home plays and put them into stocks that the algorithmic traders out there were selling because they didn't have cash flow and we were going into a depression supposedly. So they sold all of our genomic stocks, or we call that multiomics. They were down 80% within a month. You know, just algorithmic trade. So we were using that kind of opportunity. The no-brainer Zooms and Teladocs, which are big parts of our portfolio now, have been destroyed in the ensuing, you know, 2 to 3 years. And so this is what active management is all about.
So when you have that kind of swing, how do you handle? I'm sure one day you're a darling and the next day you're wrong. So how do you handle those kind of swings?
Next day, I'm a goat.
Yeah.
Like not the capitalized GOAT. I'm a goat. You know?
How do you handle that? Like, is that just part of the game?
We keep our eye on the prize. It doesn't faze me, honestly, because I've been through so many cycles. Keep your eye on the prize. Trade around opportunities. You know, when we were selling Zoom and Teladoc, they continued to go up, and we were selling them. But that gave us the psychological wherewithal when they fell by 50, 60% to move back into them because they really are answers to the way the world is going to work.
If you were one of the people here today and you were out, you're going to go either buy a business this year or you're going to start a brand new one. Which way would you go? Would you start something brand new or would you go buy something that's already in the space?
If I had an original idea that was going to meet an unmet need out there, I would start my own business. That's why I started.
You would start from scratch.
But you have to have an idea that, actually you have to have an idea that people almost dismiss. Like when we started ARC and started in ETFs, which used to be passive instruments, you know, just managed like indexes. And we said, no, we're going to manage day to day with these portfolios. People laughed at us. They didn't think it was going to be successful at all. And it gave us a great opportunity. It took 5 years for others, much better established companies to say, oh, okay, maybe they're onto something. And because we started and focused solely on disruptive innovation, they thought that was crazy. They still think that's crazy. Now they're trying to imitate us a little bit here, a little bit there, but they're not doing it the way we are. No one is doing it the way we are because no one has our research. We have the best original research on disruptive innovation, I believe, on the planet.
When did you guys move to Florida, to St. Petersburg?
November a year ago.
And from where?
From New York City.
Okay, why? And why did you make that move?
For a few reasons, actually lots of reasons. Of course, taxes come up, and that was an important reason. But we were ready. I was looking at ARC saying, okay, we have scaled, and I see a lot of asset management companies kind of just stop and tread water.
Up there.
Yeah, at a certain level. They kind of get fat, dumb, and happy. And I said, you know what? We've got to do something to keep the spirit alive. I mean, we have an incredible culture. We believe that St. Pete, Tampa Bay region, is the next Austin. And we want to help make it that. So it's very exciting to
It's
be
a fantastic, by the way. It's not Tampa, it's St. Petersburg.
Pete.
St. Pete is phenomenal. Did you guys buy office there or did you lease it?
We leased an office.
Okay.
We
How much space did you take?
I think we have 15,000 square feet, something like that.
Okay.
But now you're going to ask me how much we paid.
No, I'm not going to ask you what you paid. I'm going to try to figure out how to
I'd
become
have
your
to turn
landlord.
you over to someone.
I would love to lease you some space. So, how many people moved from New York down to St. Pete?
So 2/3 of us came, but we were already...
You live there permanently now?
Yes.
Okay. Well, welcome to Florida.
Yes.
Okay, last question. Has she been great or what?
Thank you.
It is very difficult. It is.
You're great. You're great.
Well, thank you.
You're great. So
it is very difficult to find women that want to speak on stages. It's very, very difficult. So I really appreciate you being so, like, we asked her, she's like, yeah, sure, I'd love to come. And
thank you.
Not a bunch of problems.
Thank you.
Easy to work with, transparent. Like, I like all that stuff because sometimes we get a whole list of stuff. Like, yeah, I'll come, but yeah, I got to have a trampoline in the back and I got to have certain color M&Ms and don't ask me these questions. What does the term 10X mean to Cathie Wood?
Well, it is kind of the way I think, right? If you're involved in disruptive innovation, we are taking the risks and assessing them with rigorous research. If we believe, I think I've given you a 10X, that's why I started ARC. 13 trillion to 200 trillion is more than 10X, and we really believe this is going to happen because the technology is ready and the costs are low enough. All of this was planted during the 80s and 90s. It's going to happen now. So we're all about 10X.
Okay, I'm going to do one more question. You guys mind? Okay, and I asked you this on Twitter Spaces.
Yes.
If you had $1 million and you had 24 hours, you had to invest it. I give you $1 million, I say, but the money has to be invested and you can only invest in one stock. 3 stocks. You can only invest in 3 stocks. I got to diversify, I forgot, I'm scared. I'm a bitch, I'm scared. I can't do it. So you can only invest in 3 stocks. What would those 3 names be? And I have to keep it 10 years. I cannot sell it before 10-year mark.
Right. And you'll find the models for all of
Should
these.
they have to pay for this?
Yeah.
This advice? Okay, go ahead.
No, we are now publishing our models, and so I'll give you 3 that the models are out there on GitHub, on our website. You can play with them.
The website's what?
arc-invest.com.
Okay.
So Tesla, of course, we believe autonomous taxi platforms are going to scale and create the biggest revenue-generating opportunity.
You think he's going to get the autonomous thing for sure?
Absolutely, yes. And yes, we do. And you see cruise automation has the proof of concept already. That's very interesting to us. So we have a $1,500 price target on Tesla. It's about a little over 200 now. So that's one.
Were you buying it at 112 when it was there 2 weeks ago?
Yes, we were buying it every day as it was sinking. And
it was sinking because he was selling because he needed some funds for his Twitter acquisition. Is that right?
Yes, and there were other reasons. China had zero COVID and was causing problems for production. There are a lot of short-term reasons which don't matter to us, really. That's why we can buy through moments like that. Tesla. Roku, I think, connected TV, yes, we have that.
So if I had 10 TV shows, do you think I should give them to Roku? For distribution?
I think you'll find out a lot more about your viewers than if you have those 10 TV stations now,
right?
Than you would through linear TV. So absolutely, no question about it.
Okay.
Yep. And the latest one we've published is Exact Sciences. So I have to give you one from each of our strategies. Exact Sciences, Cologuard, but here we have a chance of discovering cancer in stage 1. And with artificial intelligence, companies like Exact Sciences and Freenome's in our ARC Venture Fund, we believe that with AI, this is the promise out there. This is why 10X is so real. We believe that with AI, that researchers and ultimately physicians are going to help us discover when a body's cancer is setting up to mutate and cause cancer. That's before we get cancer. So, and we're dealing with the people who are making this happen. We give all of our research away on ARC-Invest. We're on Twitter. very prolific on Twitter. All of our analysts have their own handles. And so if you want to know more about artificial intelligence, follow Will Summerlin on ART
Yeah,
on
we'll
Twitter.
put it up for everybody to find it.
And if you want to follow blockchain technology, Yassine Almandra. And then if you like what they are saying, follow who they follow. And it's going to be the best way for young people to educate themselves about this brave new world.
Yeah. Okay, well, last question of the 3-round last question. Now, this is for me to understand, because when I listen to her, Brandon, and when I listen to Cathie, I'm like, shit, man, we shouldn't even have businesses that make money. We have probably 16 companies. Every one of them's profitable. Every single one of them.
And there's a place for that.
So if I wanted to one day take 30 or 40 companies, put them together, and then go public, could you help me learn how to do that? Or do I even want to go public?
You want to go public with companies if you want to scale exponentially.
Yeah.
You're probably going to need the capital markets. And the other thing that going public does is it increases the probability you'll attract the right talent and the right customers.
Mm-hmm.
It's a big advertisement for when you go public. It's a
big promotion.
Yes.
And I like to promote.
Yes, you do.
So would you help me? I'm trying to get a commitment from you that you would kind of be my mentor and guide me.
If you're saying you'd put them all into one company, that's a conglomerate. We don't like conglomerates. We like pure plays.
Okay.
That's just my preference,
Yeah.
though. I'm sure you could find someone.
Well, maybe we have some pure plays. Maybe we have 20 or 30 pure plays. Look, I'm here for the guidance, okay?
If your companies are involved in disruptive innovation that's going to transform the way the world works, come to us and help.
Ladies and gentlemen, Miss Cathie Wood.